As of April 18, 2023, the entire structure of federal tax credits for purchase of an electric vehicle changed. The number of EVs that qualified for a credit fell from dozens of models to just 18 separate vehicles. But there's a large loophole. If you lease an EV, the new provisions that slashed the list of eligible vehicles don't apply. Let's explain. The incentive structure changed after the Inflation Reduction Act. The IRS provisions crafted meant the EV had to be built in the US, Canada, or Mexico to qualify. Even tougher, its battery cells also had to use minerals sourced from a specific list of friendly countries that notably did not include China. Finally, those cells and battery packs had to be made here in the United States. The result is that only a minority of EVs on the market now qualify for any federal tax credit. Many EVs that received federal credits last year don't this year. As of June 5th, 2023, variants of 18 different EVs were eligible. This is a minority of the several dozen different battery electric and plug-in hybrids models that were for sale. Note, eligible vehicles must carry a MSRP under $55,000 for passenger cars and $80,000 for light-duty trucks. This includes crossovers and SUVs and obviously pickup trucks as well. So this is how the loophole started. Last December, the U.S. Treasury Department issued its guidance on interpreting the new rules specified in the Inflation Reduction Act. Under law, Congress exempted commercial vehicles, a definition most often applied to medium and heavy-duty trucks, from the domestic content rules. But the Treasury said, since a dealer who buys a vehicle and leases it to a driver is a commercial transaction, since the driver does not take title to the vehicle, instead, either the dealer or a finance company holding the lease retains ownership and receives a tax credit. The department accordingly defined leased EVs, but not purchased EVs, as commercial vehicles. Because the North American battery content and manufacturing rules specifically do not apply to commercial vehicles, any leased EV can qualify for the credit, most notably those built overseas. 3 pieces of advice to lease-curious EV shoppers. First, note that car makers, dealerships, and finance institutions that hold these leases, they're not required to pass along the tax credit, or even its full value, to you, the leasee. Leaseholders are perfectly entitled to hold back part or all of that value. So you gotta check the numbers to ensure you're getting the full value of the credit. Second, note that if the credit is applied to a lease, it reduces monthly payments immediately. Whereas if you buy the same EV, you may have to wait a year or more to apply that credit to your taxes. Third and finally, the list of EVs that are eligible for the full purchase credit will grow steadily. Numerous car makers have shuffled their global production mix to build new EVs and the cells that power them here in the United States. If you take away one thing, it should be this. You can take advantage of a tax credit on pretty much any mass-produced electric vehicle if you lease.